Move on to Mauritius. The number of tourists visiting Mauritius rising 1% in the first 6 months of the year, as a rise in visitors from Asia offsetting a drop in tourists from Europe. However, according to African Alliance, the last vestiges of optimism have now disappeared. Let's talk about this and in context of a company that African Alliance is now looking at, Sun Resorts, which is trading at a discounted book value of 60%. Christopher Blaine, equities analyst at African Alliance Securities, with me at the desk. Thanks for joining us today, Christopher. So the government had this very optimistic, exciting target at the beginning of the year. 1 million tourist arrivals is what they're looking at for 2013. Are they going to meet that with that only 1% growth in the first 6 months?
Well, government's already downgraded that, so now they're expecting 990,000. For them to achieve that, you're looking at growth of 4% for the rest of the year. Now, we do have still the peak season in December coming up, but it does look a bit optimistic to us. We're expecting that the 1% will continue for the rest of the year, so we're looking at full-year tourist arrivals growing about 1%.
So, of course, it will be yet another disappointing year, but I suppose what the average hides is where growth is taking place when it comes to tourist arrivals, new tourist arrivals, and, of course, I suppose the ongoing theme of Europe underperforming. China arrivals up 105% for the latest data there. 2,000, almost 3,000 visitors coming through from China. So, is Asia starting to play a much greater role in the tourism sector in Mauritius?
I think just to go back to the point that you made before, saying that Mauritian tourist arrivals stand to be another disappointing year. I mean, bear in mind we've had record tourist arrivals for the last 3 or 4 years, and a 1% growth means another record year for tourist arrivals. So it's actually not bad news. What we're seeing though is that there's a rise in the informal market, which is taking some tourists away from the established operators. So that's the ones that the guys can invest in. In terms of the diversification of the tourist market, that is quite a positive trend that we're seeing. So what you've seen is the absolute number of European tourists has declined over time, and what we're seeing now is Africa and Asia coming to the fore to fill that gap. Now, Africa is actually bigger than Asia. Africa is about a quarter of the market, and Europe is about 60%. Asia is around 12%. But what you're seeing is that Mauritius still hasn't really tapped the Asian market. So Asia can be quite large for them. And you can see now what was announced recently is that Air Mauritius, the national carrier, has just recently put on a flight, so a flight to Beijing, a direct flight. And that's once a week. And so it's sort of really nascent at the moment, the Asian tourists. And we're looking to them to fill the gap for the European tourists and to drive growth going forward.
But with all these record years came a response from the tourism sector, the hotel operators, to increase capacity. And what they did was they just overestimated how many tourists would be coming in the kind of subsequent years to the financial crisis. So are they in a position right now, the hoteliers, to be able to move forward from, I suppose, the issues plaguing them, overcapacity, overinvestment, in light of where the market was?
Yeah, I think so looking at it in context, I mean, a hotel takes a long time to build. So you had the peak in 2007, and guys put on a lot of capacity that they were going to build leading up to that. And so when the financial crisis hit, it's difficult to pull back from that scenario. And what happened was you had a decline in tourist numbers and a decline in profitability. And if you've got this sort of set capex, you need debt to fill that gap. So what you saw is a rise in debt, which helped depress profitability. And what you've got now is you've got generally the end of that capex cycle. And we don't really see any major hotel developments coming up in the next 2 to 3 years. So what you've got now is you've got a situation where the capex cycle is done, capex can return to normal levels, freeing up cash for them to pay down their debt. And that is the catalyst that we see for improving profitability from these very depressed levels in the Mauritian hotel sector.
How do you see Sun Resorts specifically positioned right now, with that ROE sitting at 0.3% from 22% over 22% in 2007, and the stock trading at a 60% discount to book value?
So what we see is that Sun Resorts and the hotel sector in general has been the product of, or their current prices are the product of negative sentiment in the market, and that isn't unjustified. But what we're thinking is that it's been over discounted in the price. So as you said, a 0.3% return on equity, that's incredibly low. And with this catalyst that I spoke about earlier as well, supported by the diversification in the tourist market, we see that it's been oversold.
So is this a good entry point to get exposure to a recovery in the hotel sector?
That's what we're telling our clients.
I mean, how much upside do you see in the stock?
At the moment, look, we're being conservative, but at the moment we're looking at plus 30%. That's our target price.
Conservative 30% gain you could be looking at. Thanks for joining us today. Appreciate your time. Christopher Blaine, equities analyst at African Alliance Securities.